think there's a very small cap. So when we have companies this small, that's why you can see rallies like that, which is why like retail investors love. And I mean, and I was thinking of that, and I think I'm gonna dedicate this episode to that, or I was gonna do before, because I didn't know if Evan was gonna be able to join, to just look into really small names. Like I wanted to look at the Russell 3000 because I think that's where we can find an advantage. And if we find that a good company that is a small cap, this higher risk, obviously. But look at this. This is not even $1 billion. It's 300 million market cap, and it's now 300 million. It probably was around 200 million at the time. But if you find something like that, it's much easier for it to move up because volume can easily tilt the scales in the sense like because it's such a small cap, which means there's a small amount of the overall money in the financial markets dedicated to this company. When it catches attention, like it has happened to this one, then a lot of money relatively flows in, and that pushes the stock price. It's like kind of how pressure works in a fluid system, right? In which is like if you have a really small like tube, you don't need to add as much water to increase the pressure. Like how a jet engine works is that it's like it makes the inlet or the outlet of the air very small, and that makes the pressure go higher, much higher, right? So that's kind of what happens when you do smaller cap, is that you can take advantage of that inflow of cash and higher pressure that pushes the price dramatically up or dramatically down if the money leaves quick.